down to posting some educational stuff on these premium indicators I release. So I'm going to try to get these out over the next few days, some educational content on how to use these premium indicators. We're going to start with my favorite one, which is the auto regression trend cloud. So let's get right to it. So this is what it looks like once you open it up. We have our Enova table, our bands, our little numbers on these candles, and all of that. So this is what it looks like once you open it up. And let's just talk a little bit about what it's doing here. So what it's doing is it's creating an autoregressive relationship. So it's previous candles. It's plotting it over a time frame that it deems appropriate, and you'll get the expected range for it to fall into. Now, the one thing I like about the autoregression is it's giving you realistic ranges, which means it's not going to move to fit when like this you see the stock is outside of the range. It's not going to move up like other bands where it just keeps pushing up. It's acknowledging that it's way outside of its range, and we know that eventually there's going to be a correction back into the range, which we saw this massive correction here, right? So that's what I really like about autoregression versus like z-score or something. I love z-score, don't get me wrong, but like it's going to move and fit, whereas this isn't, because it's stationary, right? So that's the first thing I love about this indicator. So you know a correction is coming when you see this kind of behavior here. The other thing I love is its reliance on Enova, which we're going to get into. So let's first go over the settings. So when we open up our settings, we have our confidence level. So the confidence level is just the degree of significance for our Enova results. 0.01 being extremely rigorous. It's very, very rigorous, a very, very strict parameter. And all the way to 0.10, which is actually questionably not statistically significant. It's really lax, very lax. It's going to give us a lot of signals, okay? So we're going to talk about this a little bit more later. We're defaulting to auto train. So this is going to auto train the model to look at the correct length. If you're really adamant that you want to select your own length, that's fine. You can unselect this and put in your own length in the train time. I recommend just leaving it on the auto learning. We can extend our plots by standard deviation. So if we wanted to extend these out 3 or 4 standard deviations, we can. Again, I don't recommend doing that because these are the default for the regression trend, and it's going to alert you to situations like this when we are overextended and due for a correction. So you can do it if you really want it to fit a little bit better, but I really kind of rely on these bands showing when we are overzealous buying or overzealous selling. And these last few options, we can unselect the candle counts if we don't want to see the candle counts, which correspond with this chart. We can unselect that. If we want to get rid of this chart, we can select none. Okay, and then we can press OK, and it will get rid of the counts and it will get rid of the chart. We're going to leave it at that while we go over how to use this to trade, and then we will come back to the Enova table towards the end. Okay, so this is what we have. We have our sell signals here. The sell signal is triggered by the Enova and the relationship to the band. So we had a significant Enova up here, and we were way outside of the range. So it's a signal two sell signals, which is pretty significant. And then we did end up seeing this big correction. Now, in addition to the sell and buy, we also get these reversal signals here. Now, the reversal is strictly just ANOVA. And ANOVA is what it is it's an analysis of the means. So it's an analysis of multiple means, and it looks for statistical significant differences between those means. So the means that it's looking at are the means between the high, low, and the close. There should not be a statistical significance between those three means because it's only over 14 candles back. When a statistically significant result is identified, there's something wrong, right? It's too erratic. So it will generally correct, and we will see these breakouts, reversals, etc. So how I figured this out. I was playing around with different statistical tests. I've been trying to make like more reliable indications of market reversals. I did try using quadratic regression to identify buy sell ranges. I had some success with that, but then I ended up scrapping the idea before I published it because I just wasn't really happy with it. And so I tried some different tests. I came across Innova as a potential candidate. I ran some tests with it. It was fantastic results. So I coded it into PineScript, played around in real time with it, and was just blown away by the results. It was just really, really great. It's actually one of the most reliable signalers I've ever seen in anything. Most of my stuff relies on Z-score to signal these reversals. It even beats Z-score. It's just fantastic. That said, there is no holy grail to buy sell signals. You're not. It's going to give you false signals. You can't rely on it 100%, but it is much improved from anything I've produced and anything I've seen accessible from a technical analysis perspective. So I'm going to teach you how to read it because it's a little bit nuanced on how you read it. So how to read what the reversal is. It does help to see where you're located within the band. So generally a reversal towards the bottom of the band is going to be a bullish reversal, but not always. So what we need to pay attention to is the previous 3 candles. So if we look here, our previous 3 candles were downtrending, right? So we had boom, 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 downtrend, reversal. We should uptrend. We did do a little push up, but then we downtrended again, but then we pushed up, right? And we pushed up quite a lot. Okay. Over here, we were downtrending, reversal, we pushed up a ton. Here we were downtrending, reversal, we pushed up a ton. Here we were downtrending, 1, 2, 3, reversal, pushed up a ton. Okay. Now these are really, really good signals because we have the confidence set at 0.01. So we have the confidence set very high. However, when I posted this indicator, I said you can, on the daily or anything over 4 hours, you can set the confidence at 0.05 or 0.10. If we do that, we're going to get far more signals. So let's do that. So you can see a whole bunch of signals just popped up. Same rules apply, but the moves are not going to be as pronounced. So you see here, we're downtrending, we get a reversal, we push up. We're uptrending, we get a reversal, we barely push down before going back up. We uptrend, we get a reversal. This one's a little bit more of a better reversal. Downtrending, we get a reversal, we push up very little, then we downtrend again, get a reversal, we push up, but then we downtrend again. And then we get a fake signal. So we're downtrending here. We get a reversal. It's a failed signal. So you can use the 0.10 or 0.5, but you're going to capture these little baby moves, right? When we keep the confidence pretty high, the signals you're going to get are going to be big, right? Like this signal led to this whole uptrend here. These signals all led to pretty sizable moves, as you can see. Like these are all really this one's a baby move, but these ones are like really big, right? Reversal, boom. Yeah, I think you get the point. So your confidence level, the more rigorous, the bigger the move. So if you get a trigger on a 0.01, a very rigorous confidence level, you can generally expect a bigger move. If you get a signal on maybe a little bit of a weaker, it's gonna move probably, but it might not be as dramatic. So let's drop down to the lower time frame. So I like this on the 5 minute time frame. So we are now on the 5 minute. I chose Boeing because today Boeing was the only thing that trended, right? So I can show you how we can use this on a trendy day to sort of help us with identifying our entries. So we're not going to enter anywhere up here, right? Because we're outside of the band. It's really pushing up. It's really bullish. It's holding outside of the band. there's really, you don't want to go long and you don't want to go short. Once we finally pull back into the band, you have two options here. If you're convinced that we're going to continue up, it's a trend day, then you can get long on this push to the bottom of the cloud. Me personally, I'm very cautious. I wait for confirmation. I'm going to get long on this candle once we push back over the SMA. Once we push back over the SMA, I know it's strong. I'm going to get long. And then once we push into this top cloud, I'm going to trail my position. Okay. So you can see we had an entry here, we had an entry here, and that was your last entry. The rest just trended up all day. So that's how you can use it in trending markets. You can also use it on rangy markets on the 1 minute. Today wasn't really rangy, but over here it was a bit choppy. So I can use this area as an example of how you can use it in a rangy market. So in a rangy market, you are just going to go to the top of the cloud and you're going to go to the bottom of the cloud. Let's just actually pop on over to Stoxel, which was really rangy today. Yeah, okay. So when you come down here, you can, and start pushing back up, you can long it to the top of the cloud. I was scalping Soxel like crazy this morning using this indicator. And then, I shorted here, it did push up, but I wasn't too concerned because it was outside of the range. We did come down. We got the reversal signal. I did long it. Again, we pushed down, but I wasn't too concerned. It did push back up. I trailed it. This was a pretty good move. And then it did come back down. I longed it again here. It did come down more. Again, I'm not concerned because we're outside of the bands, and Enova signaled a reversal on the 3 candle downtrend, and boom, we got a breakout. So it's really great for rangy markets. It actually prevented a lot of stop outs, right? I generally would have stopped out here, but I was fairly confident with the reversal and the location in the auto trend, and over here as well. I would have generally stopped out, but uh, it's a very reliable indicator. That said, use your own use your own risk management. Don't ever put your full faith in an indicator. It was a little irresponsible of me to be that cavalier with it, but just to show you how I personally use this to trade, and you can see it just likes to bounce between these clouds quite fantastically. Here we see it actually quickly sold, but there was no ANOVA reversal, so you're going to be stopping out, right? So if you got long here and then this happened, there was no ANOVA signal, so you need to get out. Okay, you got to get out and wait for it to come down. We get a buy signal. You're gonna wait. Once it pushes back into the clouds, you're gonna long it to the top of the range. Okay, so you're gonna long it right here, and you're going to take it to the top of the range, and then you're going to start trailing your position. Okay. So fantastic indicator. I absolutely love it. That is why it's premium, because it's just like the best thing of life. So that is that. Now let's quickly talk about the ANOVA table. So I included the ANOVA table as just an added, it's more academic than it is helpful for active trading, but it can alert you to when stuff is going down. Okay, when shit's going down, you're gonna see it in the ANOVA table. So we flip over to the 5 minute chart. We can see here it's signaling a high degree of variance. So this is technically significant. So anything over 6 is generally significant. Anything over 12 to 13 is hugely significant. If we go back to here, you'll see some wild readings. Okay, so we can see some reversal areas here on 31, and candle 29, 30 and 29, sorry. Wherever those are, 30, 30. So that was a downtrend, and 29 was a continuation of the downtrend. We did reverse. But right here is where it gets interesting because we have extreme variance on candle 27, 26, and 25. So if we look 26, 27, 26, and 25. So this annoying chop that is the bane of my existence actually was causing some extreme variance. Okay. When you see something like this, you know a big move is coming because this is crazy. An over 12 is really significant, and you know a huge move is coming. So you see these crazy high Nova readings, and what happens? Boom, huge breakout, right? It broke out to almost 2%. So these are very helpful to pay attention to. Obviously, it got captured with this reversal, but this is alerting you to a big move impending, okay? So it is good to have the table open if you are looking for a breakout. If you're in a period of consolidation like this, you need to have this table open because then you're going to see these kind of things, which are going to alert you to a potential breakout, okay? And that's basically the indicator. It's one of my favorite ones. I do use it absolutely every day. It is an indicator that I am religiously dedicated to. So I will link it below. Hopefully, you like it. Leave your questions below or on the indicator page. Let me know